Good morning, traders. There's one trade that's just set up overnight that I'm in, and I just wanted to update you on. And this is a short Australian dollar, New Zealand dollar trade. And the very simple rationale for this trade is both central banks for Australia and New Zealand have come out with slightly diverging rate statements. The Australian central bank came out and they had a dovish hold, and the New Zealand central bank came out and they had a hawkish hold. So there's a divergence in the way that the central banks have held their statement rates. That's it on a very simple basis. That's the simplification. And the way I entered the trade was I saw the initial drop come down overnight down to here. I didn't want to get in right at the lows. And so I drew a fib extension level of this extension down, this hawkish hold for the New Zealand bank. And I wanted to get in on a retracement. And the retracement I decided to go for was the 38.2 retracement level. Now, my reason for doing that was if you look on the daily chart, there was a technical breakdown of these inside bars. Often when the market is deliberating or trying to make up its mind or waiting for a key event, price sort of condenses into these smaller condensing bars, and you see this little coiling up. Then all of a sudden, with the hawkish hold, price breaks out to the downside, and then I knew that is exactly the trade that I now want to be taking. I have a technical and a fundamental reason. So we have a break of inside bars, and through my misspent youth of doing far too much technical trading, I came across an observation, and the observation was that when a bar breaks and closes outside a series of inside bars, often price will just come back and test the top of those inside bars, and that's exactly the same point as this 38.2 fib. So I thought, wow, what a fantastic place to enter. I can enter here, I can take advantage of my misspent technical youth of trading purely technicals, but now I have a fundamental rationale. What could be better? So here I entered here about 1.104-ish. Can't remember, this is not the platform I used to trade on, but it was around this level. It's only a few points out either way. And then my target is flexible, because I don't really know how price is going to react. Once price sort of starts getting down here, I'm going to be thinking carefully about taking profit, but I will be wanting to see the possibility 1.1. So that's roughly what I'm looking at. As I said, I will be playing this by ear. My stop was running above 1.1089. So my stop was at 1.189. I've entered here 1.1044. I'm going to be looking to reducing risk, trying to get the best out of this. But already you can see prices moving to the downside. And yeah, that's the way we're going to play it. And once this green crosses red on the RSI, if that happens with the close of this 1 hour bar, that's saying there's more bearish pressure in the market. So I'll just be monitoring it, trying to see what's going on. As you can see, this huge move down, divergence in central bank rate statements. Lovely trade. Okay guys, have a great day. Bye.